pioneer of technical analysis in India, only on ET Now.
Futures market work along with technical analysis. I'm sure you wondered sometimes why options trading in a stock is more crowded towards a certain strike price, or why, for that matter, do we see huge amounts of volatility in prices on the expiry day. Of course, our show expert Dr. C.K.NARAYAN will give us the inside story on all of it. Well, let's start out first by understanding the roller coaster ride the markets took in the month of August, and I'm sure none of us are going to forget that in a hurry. And there's the chart for you. It was really a one-way street in the month of August. The Nifty actually lost 9% on the month. There were 5 days during that month when the markets closed more than 2% down on the day, and there were 3 days out of those when the markets actually closed down more than 3% if you're comparing to the day's low of that day. 17 stocks out of the Nifty 50 and 25 stocks of the Nifty Junior hit new 52-week lows. And over 10 Nifty stocks lost between 50 to 30% of their value on that day. So the charts and the statistics seem to suggest that it was a one-way ticket to doomsville. But wait a minute, I really don't think it was that, Doc. It was actually a month where some people did make money. So what kind of bias worked in the month of August? Was it a shorting bias, people who just sold short, or was it sold short, or was it a neutral bias that worked?
Well, as July ended, I think the bias was pretty neutral. You know, if you can take a look at the chart, and here I show you a monthly chart, and here is the bars for for the month of July. What you need to really appreciate here is the fact that the month of July showed a very small range for the month. Now, typically when you see a very small range for the month, that is always a kind of a precursor to a trend which is going to emerge. So at the start of August, it was certainly somewhat neutralish, but very soon after the month of August trading began, the lows of July were broken very quickly, which then shifted the whole bias towards the negative side. And then right across the month of August, we saw this really huge range. In fact, the range of August is the largest for 2011 actually. And we had this nearly 800 point range, which if you contrast it against the normal range, of about 600 points or lesser, it was really a big range. So anybody who went short in August made lots and lots of money.
But it's easy in hindsight, isn't it? 5,500 and down all the way to 47. Honestly, hand on your heart, how many people would have made money in that month?
You would be surprised actually. Traders love being short mainly because the money comes in very quickly. The markets go down much faster than they go up.
The F&O market was also very active through the market decline, and now we know that markets trending downwards. In the F&O space, you will either buy puts or you will sell calls, or for the more advanced traders who want to play a small spread, one could also have bought a bull spread. So how do the Nifty options price themselves in the month of August? Let's find out.
Well, the Nifty options at the end of July were fairly sedate. Like I was saying that this July had a fairly neutral bias. Now, if you see the Nifty chart here, which I'm showing you with, this is a different chart with the OI and the implied volatility being shown here. Now, what you can see here is that across July, the OI buildup was fairly sedate, and the implied volatility actually trended down. So the market was fairly docile at the end of July. But as soon as you had this onset of August, you had the swift build-up in OI, which is shown here by the fairly steady increase in the figures for the OI. And at the same time, you also saw the sharp increase in the implied volatility. Both these indicated that a trend was on, and that is when your entire option pricing goes out of the window. Because you are seeing two things now. One is an increase in the implied volatility, which has a great deal of influence on how options are priced. So as the IVs spiked upwards, we actually had the option prices really flaring up. And everybody who was short options was really caught on the wrong foot, and they had to really scramble to try and buy back, which actually fed the rise even more. So the option prices kept on shooting higher.
So what you're saying really is that if somebody had sold a put had bought a put, and actually the markets went down.
Yeah, so then he made a lot of money because he's long the put. But then most of the people in the market, most traders in the market actually prefer to short options. and try to take in that premium. And in a trended month like August, they really get trapped. And they are the ones who try to scramble and try to close out.
So how much did the volatility go up?
The volatility at the end of July was somewhere around 18 to 20 odd %. And then during August, it actually fared up to as much as 37 to 38%. On an average, there were some strikes which actually went to about 40%. That's a huge increase in volatility.
You said that the option open interest built up substantially as the markets were falling. What is this signifying? That more and more participants are coming into the market?
Exactly. The OI actually shows what is the amount of contracts which are outstanding. Now this is for both long positions as well as the short position. When you see a build-up in OI, that is an increase in OI steadily, along with an increase in, let's say, the implied volatility, it's fair to assume that people are going long options here, especially the professional traders, and they are building up the options which are now becoming more and more profitable, because as the implied volatility increases, you'll actually have the option prices becoming more and more and more. So if your long options and the IV increases and you see the OI building up, then it's fair to conclude that professional traders are really loading up on long options.
Right. Okay, so when we come back after a short break, we'll try and discuss what those volatility numbers actually mean, how you can buy into them and more.